All right, so you're a CEO, CFO, or controller,
Yeah.
and you're looking ahead to all those M&A opportunities coming up in 2025 and 2026. You're in the right place. We need to talk about insurance. Not just any insurance, the kind that can really make or break your M&A success.
Yeah.
That's where BDI Insurance comes in.
You're right.
They are the pros, the experts who can really guide you through the sometimes a little bit confusing world of M&A insurance.
Yeah.
Help you sidestep some of those risks
Absolutely.
and make sure your deal goes as smoothly as possible. So think of this deep dive as your kind of crash course in M&A insurance
Yeah.
with BDI as our guide.
It's like having a Sherpa, right?
Oh, yeah?
When you're climbing Mount Everest.
Okay, love that.
They know the terrain.
Yeah.
They know the pitfalls. They know how to get you to the top safely.
All right, so first things first, let's set the stage.
Right.
What's the M&A market even looking like as we're heading into 2025 and 2026?
Well, based on what we're seeing, the experts are saying folks like EY Parthenon and Boston Consulting Group, things are looking pretty optimistic. They're projecting, get this, a 10% jump in U.S. deal volume in 2025,
Wow.
on top of a 13% increase that we're expecting this year.
10% on top of 13%. That's huge.
Yeah.
So the M&A market, it's heating up. What's driving all this activity? What's going on?
Well, it's really kind of a few different things. We've got declining inflation, which, makes businesses feel a little bit more confident about investing. Interest rates are also lower, so that makes it a little bit easier to finance those big deals. And then, importantly, company valuations are becoming more attractive.
So it's like a perfect storm, but in a good way.
It is. It is. It's a buyer's market out there, which is fantastic news for companies that are looking to expand.
Right.
But here's the thing. More deals also means more competition.
Oh, right, of course.
And that can push those acquisition costs up.
So as a CEO, I need to be on top of my game. It's not just about finding the right company. It's about understanding
Exactly.
how to do the deal itself.
You got it. And that's where having the right insurance in place is just absolutely critical.
Okay.
It's about mitigating risk, right?
Right.
Those hidden risks that can just kind of pop up during a merger and acquisition. And we're talking financial pitfalls, legal disputes, even damage to your reputation that you've worked so hard to build.
Yeah. All right, so before we even start thinking about specific insurance products,
Yeah.
what are some kind of big picture things that CEOs and CFOs need to be thinking about when it comes to insurance in M&A?
Well, one of the biggest mistakes I see is companies assuming that their existing insurance policies are just automatically going to cover the newly merged entity.
Oh, interesting.
And it's a dangerous assumption.
Right.
You need to approach insurance with a fresh perspective.
Yeah.
You got to consider those unique risks and liabilities of this new combined company.
Okay, so don't just assume.
Right.
All right, so let's talk about which industries are likely to see the most action in the coming years.
Yeah.
I'm going to guess tech is going to be a major player.
Yeah, absolutely.
Right.
Technology, media, and telecommunications, or TMT for short. It's really primed for, I think, a surge in M&A activity. The AI boom is a huge driver here. Companies they're scrambling, right?
Yeah.
To acquire the tech, to get the talent they need, to stay competitive, to stay ahead.
It's like the gold rush of the digital age. What other industries are on your radar?
So all those data centers that support AI, those need a lot of power, right?
Right.
So the energy and power sector is seeing a ton of action. We saw Constellation Energy recently acquired Calpine. That was for $16.4 billion.
Wow. Big deal.
That's a big one.
Any other sectors we should be watching?
Definitely keep an eye on healthcare.
Okay.
Companies are looking to expand their reach. They want to add capabilities. They want to capitalize on the growing demand for kind of those specialized services.
Yeah.
We're seeing a lot of interest in acquiring like specialized clinics, telehealth platforms, companies that are developing these kind of cutting-edge medical technologies.
So it's all about those strategic acquisitions that can kind of enhance a company's portfolio
Absolutely.
and their competitive edge.
Yeah.
What about financial services?
Yeah.
Is that sector expected to kind of heat up as well?
Absolutely, yeah. With some anticipated regulatory easing on the horizon, financial services is poised for, I think, a wave of M&A activity.
Okay.
Companies are looking to consolidate, expand into new markets, and capitalize on some emerging opportunities.
So we've got a hot M&A market.
Yeah.
We've got these industries that are primed for deals.
Uh-huh.
But before anyone starts signing on the dotted line,
Yeah.
let's shift gears and really dive into the insurance considerations that can make or break an M&A deal.
Yeah, and that's where BDI Insurance really shines. They have such a deep understanding of the M&A landscape,
Okay.
and they can provide those really tailored insurance solutions to address those unique risks.
So they're like M&A insurance matchmakers.
They are. They're a strategic partner. They'll guide companies through all those kind of complexities of insurance and make sure they have the right protection.
All right. So I'm ready to kind of get into the nitty-gritty of these insurance products. But first, let's take a step back and talk about the overall risk management approach to M&A. What should CEOs be thinking about from a risk perspective?
It's a great point. And I think the key here is to think about risk management as this continuous process throughout the entire M&A lifecycle, from the initial due diligence all the way through to post-merger integration.
Oh, so it's not just a one-time checklist.
No, it's an ongoing assessment and mitigation of all those potential risks.
Okay.
And BDI can play a crucial role in this process, right? By helping companies identify, quantify, and manage those risks effectively.
So it's like having a risk management co-pilot
Exactly.
guiding you every step of the way.
Bringing that experience and expertise to the table.
Yeah. All right. I'm starting to see how valuable a partner like BDI can be in the M&A process. But let's be honest, insurance can be a really complex and confusing world. Where do we even begin? What's the first step companies should take when considering insurance for an M&A deal?
The first step, and it's a crucial one, is a comprehensive insurance review.
Okay.
And this is where BDI's expertise really shines.
Right.
They'll dive deep into the seller's existing insurance policies, claims history, contracts, just to uncover any potential liabilities, right, that might be lurking beneath the surface.
So it's like a forensic investigation of the seller's insurance.
It is, yeah. BDI will examine every detail. We're looking for red flags, potential issues that could impact the deal. We'll look at coverage limits, policy terms, exclusions, got to make sure there are no surprises down the road.
Okay, that makes sense. It's all about due diligence.
Right.
Making sure there are no hidden skeletons in the insurance closet.
Exactly.
But let's say during this review process, BDI uncovers some uncovered liabilities. What happens then?
Well, that's actually a great opportunity.
Okay.
Right. Uncovering those liabilities can actually be a valuable negotiating point for the buyer.
Interesting.
They can adjust the purchase price or seek indemnification from the seller to protect themselves.
Ah, so it's like having an insurance ace up your sleeve.
Exactly. It's about being informed. It's about being proactive.
All right. So we've reviewed the insurance landscape,
Right.
we've identified potential risks, and we're ready to move forward. What's next on the M&A insurance checklist?
Now it's time to explore those specialized insurance products that can provide that extra layer of protection.
Okay, I'm all ears. What kind of specialized insurance are we talking about?
Well, one of the most important ones is what's called representations and warranties insurance.
Okay.
Think of it like a safety net for both the buyer and the seller. It protects them from inaccuracies in the representations and warranties that are made during the M&A process.
Representations and warranties insurance. That sounds intriguing. I have to admit, I'm not entirely sure what it covers. Can you break it down for me? Give me a real-world example that even I can understand.
Sure. Imagine you're buying a used car, right? You're relying on the seller to be truthful about the car's condition.
Yeah.
But what if they fail to disclose a major problem, like a faulty transmission?
Uh-oh.
That's where representations and warranties insurance comes in.
Okay.
It protects you, the buyer, from financial losses if the seller's representations turn out to be false.
Okay, I get it now. So it's like having a guarantee that what the seller's claiming is actually true. So if there's some hidden problem with the acquired business that wasn't disclosed, this insurance steps in to protect the buyer.
Exactly. It gives the buyer a little bit more breathing room
Okay.
to identify any issues and avoid those costly surprises after the deal closes.
I can see how that would be incredibly valuable.
Right.
During an M&A transaction, what are some other benefits of this type of insurance?
Well, for starters, it can help speed up the deal process.
Oh, okay.
Sellers are often more willing to close a deal quickly if they know that representations and warranties insurance is in place
Right.
to cover any potential kind of post-closing issues.
So it's a win-win for both parties. The buyer gets peace of mind, and the seller can exit the business more quickly.
Exactly.
But wouldn't this type of insurance be super expensive?
It can be a significant investment, yeah. But it's often a small price to pay for the peace of mind and the protection it provides.
Yeah.
especially when you consider those potential financial risks involved in an M&A deal.
Okay. So representations and warranties insurance sounds like a must-have for any M&A transaction.
Mm,
Are there other types of specialized insurance that BDI recommends?
absolutely, yeah. Another crucial piece of the puzzle is D&O insurance, which stands for Directors and Officers Insurance.
D&O insurance. Oh, I vaguely remember hearing about that. Can you remind me what it covers and why it's so important in the context of M&A?
Sure. So D&O insurance protects the directors and officers of a company from personal liability for decisions and actions they make on behalf of the company.
Okay.
And here's why it's so important in M&A. You need to carefully review the seller's D&O policy before you finalize the deal.
Okay, why is that? What should we be looking for?
There are two key things to watch out for: the claims-made nature of these policies and the changing control clause.
All right, break that down for me. What does claims made mean in plain English?
Claims made means that the insurance only covers claims that are made during the policy period, not after it expires.
Okay.
So that's really critical in an M&A situation because claims related to the seller's past actions could emerge after the acquisition is complete.
Ah, so if the seller's D&O policy expires after the merger and then a claim arises later, the buyer could be left holding the bag.
You got it, and that's a risk you don't want to take.
Okay, so claims made is a red flag to watch out for. What about the changing control clause? What's that all about?
So, many D&O policies have a clause that can void or limit coverage if there's a change in control of the company, which is exactly what happens during a merger or acquisition. So you need to make sure that the seller's D&O policy will continue to provide coverage even after the deal closes.
So it's like a double whammy. You have to worry about the claims-made nature of the policy and the potential for the policy to be voided or limited because of the change in control. It sounds like D&O insurance in M&A is a bit of a minefield.
It can be, yeah, but that's why having an expert like BDI on your side is so valuable.
Right.
They can help you navigate all these complexities and
Oh, yeah.
ensure you have the right D&O coverage in place.
This is all starting to make sense, so let me see if I've got this straight. When it comes to insurance in M&A, 1, we need to conduct a thorough review of the seller's existing insurance policies. 2, consider specialized insurance products like representations and warranties insurance and D&O insurance. 3, work with an expert like BDI to guide us through the process. Did I miss anything?
You got it. And remember, the earlier you engage with insurance experts like BDI, the better,
Okay.
right? They can help you identify those potential risks, tailor that coverage to your specific needs, and ensure a smooth and successful transaction.
It sounds like their guidance is invaluable throughout this whole process.
It is. Think of them as your trusted advisors, helping you navigate all that complexity, helping you make informed decisions.
Okay. We've covered a lot of ground today, from the booming M&A market to the complexities of D&O insurance. We're not done yet, though. When we come back, we'll delve even deeper into the world of M&A insurance, exploring more specialized products and strategies for protecting your deal. Stay tuned. Welcome back. Before the break, we were talking about how D&O insurance can be a real game changer in M&A.
Yeah.
Especially with those tricky claims made and changing control clauses. It's like navigating this legal maze.
Yeah,
But luckily, we have experts like BDI to kind of guide us.
that's right. And speaking of navigating tricky situations, there's another type of insurance that's absolutely essential in the M&A world. It's called runoff insurance.
Runoff insurance.
Okay.
Okay, what is that exactly and why do we need it?
Imagine this, you've successfully completed an M&A deal, everything seems to be going smoothly, and then, bam, a claim arises from the seller's past actions. Maybe it's a lawsuit related to a product defect or a breach of contract that happened, before the acquisition.
Oh, I see. So even though the deal is done, those past actions can still come back to haunt the buyer.
Exactly. And that's where runoff insurance comes in. It provides that extended coverage for those kind of lingering liabilities that might surface after the seller's kind of standard D&O policy has expired. Think of it as like an insurance safety net for the buyer,
Okay.
protecting them from those unexpected claims that can emerge from the seller's past.
Okay. So runoff insurance basically picks up where the seller's D&O policy leaves off.
That's a great way to think about it, yeah.
So if I'm a CEO involved in an M&A deal, when should I start thinking about this runoff insurance?
The sooner the better. Ideally, you'd want to have the runoff insurance in place before the deal even closes.
Okay.
That way, there's no gap in coverage, and you're protected from day one.
Makes sense.
Yeah.
It's always better to be safe than sorry. I'm starting to realize that M&A insurance is not this kind of one-size-fits-all situation.
Right.
There are so many different types of coverage and kind of specific considerations depending on the deal. It seems like it would be incredibly difficult to navigate this landscape without some expert guidance.
Yeah, you're right. M&A insurance is incredibly complex, and trying to figure it out on your own is it's a recipe for disaster.
Right.
That's why partnering with a specialist like BDI is so crucial.
Right.
They have the expertise, they have the experience to assess your specific needs, identify those potential risks, and recommend the right insurance solutions to protect your deal.
So it's not just about buying insurance. It's about having that strategic partner who can guide you through the whole process, make sure you have the right coverage in place. It's almost like having a personal M&A insurance concierge.
That's right. BDI takes that personalized approach. They tailor their recommendations to your specific deal and your industry. They really understand the nuances of M&A insurance.
Okay.
They can help you avoid those costly pitfalls that can derail a transaction.
Speaking of pitfalls, what are some common mistakes that companies make when it comes to M&A insurance?
One of the biggest mistakes I see is companies just underestimating the importance of insurance.
Okay.
They focus so much on the financial and legal aspects of a deal that they neglect the insurance considerations until it's too late.
So it's like forgetting to pack your raincoat for a hike in the rainforest. You might get away with it for a little while, but eventually you're going to get soaked.
That's right. Insurance should be an integral part of the M&A process, not an afterthought.
Got it. What are some other kind of common insurance blunders?
Another common mistake is failing to involve insurance experts early enough in the process. Companies often try to handle insurance on their own, or they wait until the last minute to bring in a specialist, and that can lead to delays, missed opportunities, and inadequate coverage.
So the key takeaway here is to be proactive, not reactive, when it comes to M&A insurance.
Absolutely.
Don't wait for a problem to arise before you seek out that expert guidance.
Right. Early engagement with BDI is key. It allows them to thoroughly assess your needs, provide those tailored recommendations, and negotiate favorable terms with insurance carriers.
This all makes sense, but let's face it, insurance can be a dry and kind of a complex topic. How can CEOs make sure their teams are on board with the importance of M&A insurance and understand the different types of coverage?
That's a great question. I think communication and education are key.
Okay.
It's important to have those open and transparent conversations with your team about the role of insurance in M&A, explaining the potential risks, the value of those specialized coverages.
Yeah, so it's not just about handing them a stack of insurance policies and saying, here, read this.
Ex-
It's about, making it relatable, explaining why it matters to their specific roles and responsibilities.
You got it. You need to create that culture of risk awareness
Okay.
and empower your team to identify and mitigate those potential insurance-related issues.
I love that idea. Making insurance part of the company's DNA, not just a box to check.
Right. And BDI can be a valuable partner in this whole education process.
Oh, great.
They offer workshops, training sessions, and resources to help companies develop a deeper understanding of M&A insurance and its importance.
Awesome. Now let's talk about the bottom line. How can companies ensure that they're getting the best value for their money when it comes to M&A insurance?
That's where BDI's expertise really shines.
Yeah.
They act as your advocate, negotiating with insurance carriers to secure those competitive premiums, those favorable terms.
So they're like insurance negotiators.
They are. They leverage their market knowledge, their relationships to secure that comprehensive coverage at a competitive price.
So it's not just about buying insurance. It's about buying the right insurance at the right price.
Absolutely.
And that's where BDI's expertise can make a huge difference.
It can. They can help you navigate that complex world of M&A insurance, ensure that you have the right coverage in place to protect your deal and your bottom line.
As we wrap up this deep dive, I want to go back to something you said earlier about risk management being an ongoing process throughout this whole M&A life cycle. Can you elaborate on that a bit more?
Sure. Risk management isn't just a one-time event. It's the continuous cycle of identifying, assessing, mitigating, and monitoring potential risks. And it doesn't end when the deal closes.
So it's not like you just cross insurance off your to-do list.
No, not at all. Post-merger integration is a critical phase. New risks can emerge as those two companies combine their operations, their cultures, their systems.
So it's like merging two rivers.
Yeah.
You have to carefully manage the confluence to avoid any kind of unexpected turbulence.
That's a perfect analogy.
Right.
And BDI can play a valuable role in that post-merger phase. helping companies identify, address any emerging risks, and ensure that their insurance coverage remains adequate.
So it sounds like BDI is there every step of the way,
They are.
from the initial due diligence all the way to that post-merger integration.
Uh-huh.
They really are the ultimate M&A insurance partner.
That's right. Their understanding of the M&A landscape, their personalized approach, and their commitment to client success, it makes them such a valuable asset.
Okay, so this has been incredibly insightful.
Good.
But before we wrap things up, I want to circle back to those hot industries we discussed earlier.
Yeah.
Are there any specific insurance considerations that CEOs should keep in mind when they're targeting acquisitions in those sectors?
Absolutely. Each industry has its own unique set of risks, right? And insurance needs.
Okay, let's start with tech. What are some key insurance considerations for M&A deals in that sector?
In tech, intellectual property is king. So it's crucial to ensure that the target company has adequate insurance coverage for those intellectual property infringement claims. You also want to carefully assess the target's cybersecurity posture.
Right.
And make sure they have robust cyber liability insurance to protect against data breaches.
That makes sense. Cyber risks are a huge concern for these tech companies, especially in the age of AI and big data. What about the energy and power sector? Any specific insurance considerations there?
In energy and power, environmental liability is a major concern.
Yeah.
You need to make sure that that target company has comprehensive coverage for environmental pollution
Okay.
and any potential liabilities related to their operations.
So it's not just about insuring physical assets.
Right.
It's about understanding those environmental risks. What about healthcare? What are some key considerations for M&A deals in that sector?
Healthcare is a highly regulated industry. It has very unique insurance needs.
Yeah.
Professional liability insurance, also known as malpractice insurance, is absolutely essential. To protect against claims of medical negligence, you also need to carefully assess the target's compliance with IPALE and all those other healthcare regulations, and make sure they have adequate coverage for privacy breaches.
Wow, it sounds like healthcare M&A insurance is a whole other ballgame. What about financial services? Any specific insurance considerations there?
In financial services, fiduciary liability insurance is crucial.
Okay.
That's to protect those directors and officers from claims alleging breaches of fiduciary duty. You also need to consider coverage for things like financial fraud, regulatory investigations,
Right.
and all those potential liabilities unique to the financial sector.
This is all incredibly valuable information. It's clear that M&A insurance is not a one-size-fits-all proposition. It requires that deep understanding of the target company's industry, operations, and risk profile. And that's where having an expert like BDI on your side is just essential.
It is. They can help you navigate the complexities of M&A insurance, make sure that you have the right coverage in place to protect your deal, your company, your future.
As we wrap up this deep dive, what are some key takeaways you want listeners to remember about M&A insurance?
First and foremost, M&A insurance is not optional. It's a critical part of any successful merger or acquisition.
Yeah, okay. So insurance is not just a nice to have, it's a must have.
It's a must-have. Second, don't try to go it alone. Engage with an experienced M&A insurance specialist like BDI early in the process.
Okay.
They can help you identify those risks, negotiate favorable terms, secure the right coverage.
Got it. Expert guidance is essential. What else should CEOs and CFOs keep in mind?
Don't underestimate the importance of that post-merger integration.
Right.
New risks can emerge. BDI can help you navigate that phase and make sure your insurance is adequate.
So it's a marathon, not a sprint.
It is.
What's the single most important piece of advice you would give to listeners about M&A insurance?
Be proactive. Don't wait for a problem to come up. Engage with BDI early. It can save you time, money, and a lot of headaches down the road.
Excellent advice. Well, folks, we've covered a lot of ground today, from the booming M&A market to the essential role of runoff insurance. We've explored those complexities of D&O coverage, the importance of those industry-specific considerations. But before we sign off, I want to make sure that our listeners are walking away with some actionable insights. So let's kind of recap a few key takeaways, and maybe you can leave us with a final thought to ponder.
Yeah, sounds good. I think the most important thing for CEOs, CFOs, and really anyone involved in M&A activity is that insurance isn't just about protecting your company from financial loss. It's about making sure you have a smooth transaction, building that confidence among stakeholders, and ultimately setting your merged entity up for success.
So it's not just about mitigating risk, it's almost about creating opportunity. It's like that old saying, the best defense is a good offense.
You got it. Exactly. By proactively addressing those insurance considerations, you can actually create a competitive advantage.
Yeah.
If you're a buyer and you can demonstrate a deep understanding of insurance and risk management, you're going to be seen as a more attractive partner.
Yeah, that's a great point. It's like having a secret weapon. And I think what we've learned today is that BDI Insurance is that secret weapon. They're the experts who can help you navigate this complex landscape, identify those potential risks, and secure the right coverage to protect your deal.
They are. And they're not just insurance brokers, they're strategic advisors who can help you make those really informed decisions throughout the process.
So if you're a CEO, CFO, or controller involved in M&A activity, my advice is this. Don't wait until you're in the thick of a deal to start thinking about insurance. Reach out to BDI early. Leverage their expertise. Make insurance a core part of your M&A strategy from the beginning.
I couldn't agree more. Proactive planning, expert guidance, those are the keys to successful M&A. And with the right insurance partner by your side, you can conquer any challenge.
Well said. This has been The Deep Dive, and we hope you've enjoyed this exploration of the fascinating and often overlooked world of M&A insurance.
Until next time, stay informed, stay strategic, and stay ahead of the curve.
And remember, knowledge is power, especially in the world of mergers and acquisitions.